salary and dividend payments, optimizing your compensation strategy. As an owner of a limited company, Ltd, one of the most effective strategies for optimizing your personal income is through a combination of salary and dividend payments. This approach can significantly reduce your national insurance contributions, NICs, and income tax, maximizing your take-home pay. Here's a detailed look at how to leverage salary and dividends to your financial advantage. Understanding the basics. Salary is a regular payment made to you as an employee of your Ltd, subject to income tax and national insurance contributions. Dividends are payments made to shareholders from the company's after-tax profits, taxed at a lower rate compared to salary and not subject to NICs. The tax efficiency of combining salary and dividends. Combining salary and dividends can create a more tax-efficient compensation strategy. Pay yourself a salary up to the personal allowance threshold, currently £12,570 in the UK, to utilise the tax-free allowance. This portion of your income will not attract income tax. Additionally, paying a salary ensures you qualify for state benefits and contributes to your state pension. Take the remainder of your income as dividends. Dividends up to the annual dividend allowance, £2,000 for the current tax year, are tax-free. Above this threshold, dividends are taxed at lower rates than salary. Basic rate, 8.75%, higher rate, 33.75%, and additional rate, 39.35%. Reducing national insurance contributions. One of the main advantages of taking dividends is the reduction in NICs. While salary payments attract both employer and employee NICs, dividends do not. By optimizing the balance between salary and dividends, you can significantly reduce your NIC liability. Setting the optimal salary. To determine the optimal salary, consider the following. Aim to keep your salary within the personal allowance to avoid income tax. Pay yourself a salary that is high enough to qualify for state benefits, but low enough to minimize NICs. The secondary threshold for employer NICs is £9,100, while the primary threshold for employee NICs is £12,570. Salaries are tax-deductible expenses for the company, reducing its corporation tax liability. Distributing dividends. Dividends are paid from the company's after-tax profits. Ensure that your company has sufficient profits to cover dividend payments. The process involves declaring the dividend at a directors' meeting, issuing dividend vouchers to shareholders, and recording the dividends in the company's accounts. Example calculation. Let's illustrate with an example. Salary of £12,570, utilising the personal allowance, and dividends of £30,000. Tax calculation. Salary of £12,570. No income tax due. Dividends. The first £2,000 is tax-free. The remaining £28,000 is taxed at 8.75%, assuming within the basic rate band. Dividend tax, tax-free. Allowance £2,000, taxable dividends £28,000. Tax £28,000 times 8.75% equals £2,450. Total tax, income tax on salary £0, dividend tax £2,450, total tax £2,450. NICs, employer, NICs, none on salary up to the secondary threshold. Employee, NICs, none on salary up to the primary threshold. By combining salary and dividends in this manner, the total tax and NICs are minimised, resulting in a higher net income. Compliance and planning. It's important to ensure compliance with tax regulations and proper documentation of salary and dividend payments. Regularly review your compensation strategy with a certified accountant to adapt to changes in tax laws and to optimise your tax efficiency. Opting for a combination of salary and dividends is a highly effective way to optimize your personal income and reduce tax liabilities as an Ltd owner. By understanding the tax implications and strategically planning your compensation, you can maximize your take-home pay while ensuring compliance with tax regulations. Are you looking to optimize your salary and dividend strategy? Contact us at Super Financial Limited Dorset branch, where our team of certified accountants can provide personalised advice and assistance in structuring your compensation for maximum tax efficiency.